What's going on, y'all? Happy Sunday. Welcome to November. Welcome to November, y'all. Listen, for those of you that are unfamiliar, I am an 80s baby, okay? So you gonna see me, bobbing to 90s stuff. I love hip hop. I've always have, and that's like my thing. I listen to instrumentals when I trade and stuff. So, rock with me if you gonna rock with me. If you don't and you're like, I ain't with all that, then that's fine. You know what I'm saying? I might not be your cup of tea, so you just go on somewhere else, okay? No hard feelings or anything like that. So welcome everybody as people are jumping on. First of all, as you jump on, do me a favor. Let me know where you're tuning in from. Okay, what city, what state, what country are you tuning in from? That's number one. Number two, y'all hit that thumbs up on YouTube. Okay, hit the like, hit the hearts on Facebook, all that good stuff. Let it be known that you are here. You're in the building. All right, and then if you have not done so yet, for those of you on YouTube, hit the subscribe button. All right, press that notification bell, especially if you're not part of the Prosperity Cause community yet. Hit that notification bell because you won't get the email and text message notifications and whatnot of when I'm live on this particular channel. So make sure that you hit that notification bell on YouTube. All right. And last thing, but definitely not the least thing, y'all, please make sure that you're sharing this live stream with someone. If you're watching a replay, still share, but share this live stream with someone that is having trouble with trading. All right, that could be a person who is brand new and they're like all over the place, can't seem to figure it out, probably haven't found the right educator yet, whatever it may be, or a person have been trading for a while, but they haven't really been successful. They're kind of on the verge of throwing in the towel, like just giving up altogether. Make sure that you share this with them because trust me, it will help them. There is something that I'm going to share that more than likely is going to give them an aha moment. Everything that I say may not resonate, but trust me, I've heard it time and time again. There have been people that's like, that's what it was. It just clicked. Like, I got it now. And they go on to do what they're doing using the strategies that they're using. All right. So those are some of the formalities we're going to get out the way. Now, the next thing we're going to do, y'all, is get into this. That's the wrong one. Get into this this disclaimer. Okay. So let's get into the disclaimer and then we're going to move forward. So remember, y'all, trading and investing in any market can contain substantial risk and is not suited for every individual. Every trader and investor learns and performs differently, thus the results will not all be the same. There's a potential for a trader and investor to lose all or more than their initial investment due to numerous factors. Therefore, it is suggested that each trader and investor only invest money that can be lost without jeopardizing their financial security and or lifestyle. Y'all remember, I am not a financial advisor. I'm not a licensed trader. I don't work with the CFTC or anything like that, okay? I am a student, and I'm on this channel. I'm on this live stream, or if you're watching a replay, I'm here to share things that have not worked for me, but also the things that are working, that's currently working for me right now and have worked for me in the past, okay? And hopefully me sharing some of those pitfalls that I've personally experienced over the past almost, 6 years of trading, some of those pitfalls, I could share those with you in hopes that you avoid them. Okay. That's the goal. That's the angle. So hopefully, you get to the results you want much faster than I did. Okay. So I'm only sharing information, y'all, for educational purposes for you as a viewer to do your own research. The expectation is everything that I share with you all, y'all, doesn't matter what it is, you take it and you do your own due diligence. Okay. That's something that I did not do a great job of in the beginning of my trading journey. So this is why I'm going to say it over and over and over again. I am not the end all be all when it comes to trading, but I want to make sure that you at least have a central point of focus, okay, to know what you're supposed to be researching. All right. Google is your friend. Now, remember, y'all, all traders and investors that utilize these strategies that are discussed on this channel, on this live stream, any services or products shown will do so at their own risk. Y'all remember, past profits do not guarantee future results. Okay, so we're going to keep this thing moving because we have elections this week and I want us to get into all of that. Okay, so last month, y'all, we went 4-1. Okay, now it could have been 5-0, but here's why I said 4-1, because with Euro CAD, EURCAD, that's the euro paired with the Canadian dollar. For those of you that are not familiar 100% with Forex, you're still fairly new. That's the euro paired with the Canadian dollar. That one I gave instructions, but just in case there was someone that didn't understand what I said, or sometimes people just like, I gotta touch the stove to see if it's hot. All right. But I just went on ahead and said, hey, I'm gonna just mark that one as a lesson. Y'all know I trade gold more than anything. Gold is still my number one go-to to trade. So we looked at that 3 times this past month in October, and we also looked at GBP AUD. That one actually was a winning setup as well. Okay, so again, October was a good month. It was 4-1. Prior to that, oh man, what we did in September? We were 9-0 for September. August was 12-1. July was our worst month. We definitely took some lessons in that month in July. That was 2. So that one was 4-2, I want to say. In July. I can't remember June and all of that stuff, y'all. I do remember from July up to now. And for those people who are part of the community, you probably already got an email. You should have already gotten an email with a breakdown of like what trading has been like this month for us doing these live Forex market analysis. Okay, so that is our last month in review. Gold, we have been able to make money. We've been profiting on that. GBP AUD, profited on that. It hit our profit areas, I should say, because I didn't trade GBP AUD. Y'all know I'm gold. Listen, this is my order, y'all. Gold is still number one for me. Then it switched. It used to be gold, NAS 100, and then Bitcoin. But now it's gold, Bitcoin, and then NAS 100 is the number 3 for me. Okay, so those are my 3 go-tos. Anything else outside of that, I'm very cautious because I don't really trade those other things like that. So I may lower my lot size and whatnot. But those 3, I got those. All right. So that's last month. For those of you that are new, this is on FinViz. So you can actually use this as this page as a gauge to see like what currencies are strong at the moment and which ones are weak, because there's an option for you to see by the day, and this one is by the week, which is what I have, and then they have by the month. So you can kind of figure out like where the market has been for the past week, for the past month, and then also today. It constantly updates as well. So it's kind of like the currency strength meter for people who are familiar with how I trade. I still use the currency strength meter, y'all. This is an alternative. There's a reason why I show y'all this, but the currency strength meter for me, that's like my go-to. I'm gonna always use that unless something changes. But for me, it's easier to navigate and everything. The only thing though with currency strength meter is it doesn't automatically update. FinViz automatically updates for you, so you don't have to keep refreshing the page like currency strength meter. But anyway, so the point, the point of this particular screen, y'all, is to let you see what currencies were being bought the most and which ones were being sold. Okay, so y'all know the US dollar has been stable for the past 3 months. Y'all, the election is next week. So if this is your first live stream with me on this, then y'all, the US dollar is seeming to be neutral because there are a lot of investors like myself that are like, hey, yo, I don't know. You know what I'm saying? We're going to have to see what happens with this election. Like, you don't really want to put your money into anything, you know what I'm saying? Like with the US, because you may be doing more investing in gold. You may be doing more investing in other businesses outside the United States. You may be doing more investing in cryptocurrency. You may be doing more investing in like your bonds and treasury bills because those are giving really high percentages. So you're not really doing much with the US dollar per se, but I'm telling you, like the time is coming. This is going to change after this election. Okay, it's not going to sit still like this any longer. We will see it's either going to go up or it's going to go down depending on who takes office. Okay, or who is elected, I should say, on Tuesday. So the euro though has been seeing some gains. We see that's been buying, all right, and then everything else has been selling. So this tells us that for last week Australian dollar, you probably, depending on what it was paired with, you probably would have seen it if it's paired with something where like it's the end, like GBP AUD, then you may have seen GBP AUD either buy or been in a bit of consolidation, okay? Because even the pound has been selling, but the Australian dollar is much stronger or as far as the sale goes. So yeah, things paired with that, it depends on where it's positioned. So I just wanted you all to see that. I like to be able to see what happened in the last week because that helps me to identify what were the biggest movers of the previous week, right? Y'all know there's 3 things that I trade. So I'm not looking at everything else throughout the week unless it's something that we looked at with the Forex live market analysis on Sunday, right? Like I'll do stuff because I'm collecting data, especially because this is an election year. But for the most part, there are those 3 things that I personally trade that I look at every single day, no matter what. Whether I'm going to trade it or not, I still look at it. I still mark it up no matter what. Okay. So last week, our biggest movers was GBP JPY. That went down over 270 pips. Y'all, there are currency pairs. They did move like 100 or so, you know what I'm saying? But it wasn't like massive movement like we've seen in the previous weeks. So that's why I don't have a bunch of like, or I don't have at least 2 currency pairs on here because all the rest of them were like less than 200 pips in movement. Okay. Gold, mine, gold shot down almost 600 pips, y'all. It went down 558 pips. That's a lot of money in the market, y'all. I'm telling you, when you learn how to trade currency pairs and you build up a tolerance for the volatility that comes with trading things outside of your currency pairs, trust me, gold needs to be on your list. Gold, because it's easier for you to identify, you know, what's gonna happen versus like with your indices and whatnot. It's just, for me, it's easier to navigate. And it could be because I've been trading for so long. So, you know, but yeah, so gold went down 558 pips. Depending on who's elected, I am anticipating gold pushing back up and probably possibly hitting the previous all-time high, if not surpassing it. So we'll see though. We'll see after the election on Tuesday what's going to happen. So Bitcoin is the only thing that went up massively. But after this massive push to the upside over 5,800 pips, Bitcoin dropped after that over 4,000 pips. So it did buy for a period, but then after that buy exhausted, it did push down and then started to consolidate. And US 30, that's the equivalent of the Dow Jones for my people that invest or trade in the stock market. US 30 went down 572 pips. So if you're a person that's been trading for a while and you like indices, more than likely you probably jumped into US 30 this past week. If you didn't, then yeah, you missed a good amount of movement, but it's okay. It's a new week coming up, y'all. So don't dwell on like what you missed out on last week or what your results were last week. Study what happened. If you would have entered the trade again, great. You know what I'm saying? Keep that same mentality. If you're like, nah, I see why that trade was a bust because I jumped in too early, or I didn't follow my strategy 100%, or you know what I'm saying, I cut my losses early instead of just sticking to my stop loss, and then it turned around and went in my favor. Whatever, like just go back, look at what you did last week, your wins as well as your lessons, and then make adjustments where you see fit for this new week. All right. Because last week, the Forex market did experience a lot of selling. Okay. It was a whole lot of selling, more so than the buying. So, and that includes crypto and indices, y'all. So again, this is an election week. And so I want to touch on this because some people are probably like, oh my gosh, like, well, how do I prepare for it? Like, what do I do? If you are new to trading, give me a 1 in the chat if you're watching live. If you're watching the replay, put a 1 in the comments, okay? If you are new to trading, like you've been trading less than a year, all right? You've been trading for less than a year. You haven't, made any money trading yet. You're probably still in your demo account. Some people in their demo account. I've ran into at least 2 people who were in the demo account for longer than a year. That's the only 2 I know of that have said they were in their demo account for a year. But if you're still in your demo account and whatnot, which is fine, y'all, that's fine. Please don't feel bad because you're in a demo account. Listen, I would much rather you be in a demo account, practicing, building up your confidence, getting stronger with the fundamentals of trading, than going and just dumping money and you have no clue what you're doing. All right. So if you have been trading for longer than a year, all right, you're no longer new, y'all. Put a 2 in the chat. For those of you watching live, put a 2 in the chat if you're watching a replay. And y'all, if you haven't done so yet, please let me know where you're tuning in from. Put your city, put your state, put your country in, because I see I have more people that just come on. Put your city, put your state, put your country in the chat. Share this live stream, because this is gonna be one of those that people that are new to trading, that are confused, whatever it is, this is something they need to watch like now, okay? Because the election is on Tuesday. You don't want to be waiting until the last minute to get your trading plan and your risk management plan updated. All right. So I got you. All right, let's run it. So listen, I'm going to give y'all just a little bit of background, like a little bit of historical, information pertaining to the Forex market. All right. When we're talking about volatility, liquidity, all of that stuff. So here we go. So I'm going to go back to 2000. All right. That's when I graduated high school. You know what I'm saying? I became eligible to vote. And so that way, boom, we doing 20 years ago. Okay. A little over 20 years ago. So let's run it. So George Bush versus Al Gore. So for those of you that may remember, okay, you probably voted during this time. There was a whole debacle, with the Florida counting and everything, right? So during that time frame prior to the election, but then definitely on election day with that whole recount issue, there was higher volatility and there was lower liquidity, meaning the market was kind of like moving rapidly, but there wasn't enough new money going into the market. Okay. So after that election, though, post-election, now we see, okay, the Supreme Court, resolved the whole election situation. George Bush is legally the president at that time in 2000. So guess what? Now we saw an increase in liquidity. So more new money is back into the market. Okay, that makes sense. So for you as a trader, I need you to start thinking about, like, what are some of the things that you're hearing people say today? All right, that you've been hearing people say over the past week. If you watch like Bloomberg, Yahoo, listen to or read Yahoo News or Yahoo Finance, Yahoo Finance, what I'm saying, MSNBC, whatever outlet you listen to or podcast you may listen to, because there are a lot of finance podcasts that you can listen to, whoever it is you're listening to, or Twitter spaces that you're getting on to hear information about the market and how this election is impacting the movement and investors and how they're moving in the market, then these are some of the things that you want to hear. You want to hear, like, okay, so no, I'm not going to do that. Let me go ahead and finish this before I jump the gun. Let me finish this before I jump the gun. All right, so that's 2000. All right, then 2008 comes along and we have John McCain versus Barack Obama. All right. And pre-election at this time in 2008, there was a lot of volatility, so the market is really moving, but there's reduced liquidity due to the financial crisis, y'all. This is the recession, right? This is that recession time period, the housing crisis and whatnot. Okay, so there's not a lot of money moving and circulating like that. Okay, post election, the liquidity remained low due to the recession, right? So as you can see, notice here on the right hand side, I don't know if y'all peeped that, you know what I'm saying? But this is just showing us that there wasn't a lot of movement to the upside, okay? And then 2016, we had the Hillary Clinton versus Donald Trump election. So pre-election, this was a close race, actually, and this led to market uncertainty. And of course, with market uncertainty, you have reduced liquidity, meaning, again, for my people who are like, I don't understand this whole liquidity thing. Y'all, there has to be money moving consistently, and it has to be new money too coming into the market. So if you have like hedge fund managers are like, we're pushing pause. You know what I'm saying? Like we're putting some, but we're not putting the amount we normally would. Let's say that there's normally, certain financial companies or banks and whatnot that put in, let's say like 100 million a day, or 1 billion every single week or whatever. Like if you're not seeing that level of money moving into the market by multiple entities, then that's going to slow down, the amount of liquidity that's available for us to trade. Now, here's the thing though, with the volatility, you're still going to see, I say, erratic movement, because if it's super volatile, it's harder to gauge what the market is going to do. It's a bit more challenging. Now, if you're aware of like the cycles and stuff around what time, what news happens, what the market does and whatnot, then you can kind of get a better gauge of it. But when it's elections, you have to just kind of play things by ear, and you're going to have to make adjustments. Definitely have to take precautions when you're trading. So that's what happened pre-election, but then post-election, there was like a brief spike in volatility because Trump was announced president. And then the liquidity kind of leveled out over time, because now everybody had an understanding of like what his policies were and everything. So boom, now everything went to how it was normally flowed, right? And then 2020 came along, y'all. So this is Joe Biden versus Donald Trump, right? So we had our pre-election, COVID-19. Oh my gosh, that was the talk. And we still sitting here like, how are we getting through this thing, right? So COVID-19 concerns pretty much led to a lot of uncertainty, which of course increased volatility, and it lowered liquidity. Again, y'all, when there is uncertainty in the market, people are not putting new money into it, okay? They may put money into the market, but it's not going to be the influx that we're used to when there's a good, stable market going on, okay? But post-election, then we saw the liquidity improved as the transition of power proceeded smoothly. All right. Now, here we are, 2024. Election is Tuesday, y'all. We got Kamala Harris versus Donald Trump for 2024. And right now, I don't know if y'all noticed this, but, there's been a noticeable shift in the volatility and liquidity. I'm gonna tell y'all right now, straight up with gold. Listen, y'all, it threw me for a loop. I told y'all, it was last month. I told y'all, like, I lost 2 trades, like back to back. Like one day, I'm gonna just say Tuesday. I don't really remember what day it was, but I know it was 2 back to back in 1 week. And I was like, whoa, that's not normal for me. You know what I'm saying? So I immediately was like, hold up. And I started like journaling, and I'm like, So I created a gold journal specifically. Like it wasn't for anything. I wanted to be like, what the heck is happening with gold right now? I got it. It's an election year. So I know that has a major role in it. You know what I'm saying? Excuse me, y'all. But I'm like, yeah, I know that has like a major role in it, but I'm like, like we need to get this together. You know what I'm saying? So, but once I realized that I'm like, hey, you can't move the same way you've been moving because this is an election year. You're getting closer to election, so you got to make sure that you're adjusting accordingly. So that's what happened. So I noticed that gold was doing it, it would move to the upside, and there were setups where it's like, okay, a sale is coming, but then it's like and then it take off and create another new high, all-time high. And so I was like, yo, like I'm not even gonna lie, I'm gonna wait to rejoin a sell trend. Like I don't even want to look for the reversal. I want the sale to happen. And then once the pullback, this is what I did, y'all. I'm telling y'all what I did to not continue to take lessons with gold, right? So once gold hits an all-time high and whatnot, after I did those 2 lessons, I was like, yo, I'm not doing this again. So I was like, I'll just wait. Once the sale starts to happen, I will wait for the pullback to complete. And then a new bearish candlestick pattern has to confirm. That's when I'll get in the trade. So that meant that I was only going to trade 2 particular patterns, right? Candlestick patterns. So I already knew, like, bam, it's one or the other. That's it. It ain't nothing else. And this way, that y'all, that helped me with minimizing the lessons. So now after those 2 lessons back to back, I didn't take another one. So I'm like, okay, that's how I got to play this when it comes to gold right now during this election. That makes sense, y'all? Hopefully I'm not losing anybody. Let me go to this and see if anybody had any questions. No, I gotta go because it's already 9:30. Okay, y'all, I'm hanging up. All right, so that's where we're at. So I can't say anything about post-election until the results have been had, and then of course, you know, we're gonna have to look at inauguration and everything. So after the inauguration, that would probably be a better idea of like what we're looking at for trading in 2025. Okay, so I got it, you know, post-election, like the day after. There's going to be a whole lot of talk about, you know, what we're expecting to happen in the market, yada yada, because whoever is elected president and everything. So that's, we can start making some moves then. But here's the thing, this is what I need y'all to pay attention to right now. We need to prepare for election day. Okay, election day. So I'm gonna give y'all a couple of things. Okay, I'm gonna see, can I move this out the way? Let me see. Hold on 1 second, y'all, because this is in my way. Give me 1 second. I need to move this out. Okay, there we go. I had to remove myself for a second, y'all. So anyway, so here's a couple of tips, y'all, to prepare for election day. Remember, election day here in the United States is November 5th. That is Tuesday. So number 1, whatever brokers you are using, y'all, I'm telling you now, they are going to be sending out emails. Please check them. Don't just be like, oh, yeah, such sent the email. No, I need you to open those emails. This is going to be very important because they're going to give you guidelines and they're going to tell you what they're going to do or what they're anticipating on election day. Okay? I need you all to anticipate these things, okay? Number 1, I need you to anticipate wider spreads. Listen, the volatility that is going to happen on election day is going to be out of this world. When you have that much volatility, guess what the brokers do? They increase the price for you to enter, which equals for us the term spreads. So our spreads are going to be much higher than they usually are. Hence why I personally would not be trading on election day, because the 3 things that I really, really love to trade are all US based currency pairs, commodities, and so on and so forth, right? So that means for me, election day is off limits. I already know that. I'm done. Tuesday, I'm not trading at all. excuse me, y'all. The second thing I need y'all to be mindful of is order execution slippage. What does that mean, Leona? That means that because of the volume, because of the volatility, the broker may not necessarily execute your trade to enter or exit at the time that you anticipate or at the time that you're inputting for them to enter you into the trade, for them to close you out in profit should it hit your take profit point, for them to close you out in the stop loss should you put a stop loss in and it goes in the opposite direction, and now you need that stop loss to secure you. Y'all, I'm telling you, you need to make sure that you're paying attention, because this time is not the time to play games and to be like, oh, well, and I'll willy-nilly. This is not, election day is not the time to sit here and show your amateur slip. If you really have been trading for less than a year, if you have not been consistently profitable and you've been trading for more than a year, I need you to stay your tail away from the market. I don't care if you talking about, well, I'm going to trade some, miners or whatever. I don't, just stay away from the market. How about that? Seriously. You know what I'm saying? Just mark up your charts and just analyze the market. Take notes. So now you have something for the next election cycle. Okay. The other thing, y'all, there may be trading restrictions. So there are brokers that may say, hey, because we're anticipating a lot of volatility, we won't allow people to trade things like gold. We won't allow people to trade any crypto. Okay, that is paired with the US dollar. You may be able to do like USDT, but they won't let you, and that's if your broker allows you to trade that. But they may not let you trade Bitcoin paired with the US dollar, so BTC USD. All right, this is why it's important for you to check your broker announcements. When they're sending an email, please don't just glance and be like, oh yeah, they sent it. No, read it so that way you know what they're talking about. Okay. The other thing, y'all, if I were you, all right, because I already told y'all I'm not trading anything paired with the US dollar. So there's no trading major currencies. There's no trading indices for me. So no NAS 100, y'all. If you're a US 30 fan and stuff, I strongly advise you. I strongly suggest, let me rephrase that because I'm not a financial advisor. I strongly suggest y'all that you do not trade any indices at all on trading day, on election day. My bad. Okay. I strongly suggest that you don't trade any cryptocurrency that is paired with the US dollar. So Bitcoin, so BTC USD, ETH USD, that's Ethereum, XRP USD, that's XRP. Like anything paired with the US dollar, y'all, please, man, I'm telling you to save you some heartache and save yourself some money. So you're not giving it back to these markets, right? Do not trade anything paired with the US dollar on election day. That's November 5th here in the United States. Okay. If you're going to trade anything outside of that, all right, I got it that they're not US pairs. So like, let's say you're trading GBP AUD, GBP JPY, so you know what I'm saying? So Euro GBP, whatever it is, you may be trading some other stuff. If I were you, I would still lower my lot size. Why? Because again, it's election day. And so your broker may not be able to activate those trades when you want them to. You know what I'm saying? So I'm telling you, y'all, please take the precaution. If you're still going to trade the miners and whatnot, if you're still going to trade exotics, if you're going to do that, excuse me, if you're going to do that, lower your lot size. And the other thing I would add is tighten your stop loss. Because again, that order slippage, man, that slippage is no joke. And you'll be like, why didn't it close me out? And I was supposed to be, out the trade because I was losing. Well, guess what? It's election day. So I'm telling you, y'all, I would not trade at all on election day. I don't care what you're trading. But if you're going to do it, lower your lot size, tighten your stop loss. Okay. And on top of that, I'm going to add one more thing, y'all. You need to look for the lowest risk trades possible. Like, seriously, you need to look for, like, this is like an unbelievable setup. Like, man, I have never seen a setup like this before. This is freaking amazing. This thing has a potential to give me a 1-to-5, 1-to-6, 1-to-7 risk to reward ratio. Like, seriously, y'all, you need to look for really low risk trading opportunities. The lower the risk, the better your chances are of not giving your money back to the market. Okay? Does everyone have it? Seriously, y'all, give me a thumbs up. Give me, I got it. Type I got it in the chat. If you're watching the live, if you're on the replay, still type I got it. Okay? Don't play games out here in these streets, y'all, on election day. You're going to get your head knocked off, and then you're going to be sitting here like, man, I should have listened to Leona. I ain't going to tell you I told you so, because I'm telling you today. All I'm going to do is be like, all right, what you learned from it? Now let's move on. Right? Like that. That's it. What did you learn from that? And let's keep it pushing. Okay? So those are the tips, y'all, for election day here in the United States. Even if you are not in the United States, because I know I have some people who are out of the country, who are in different countries, and they trade major pairs. Y'all, please don't do it. I know it may be Wednesday in your country, but if it's Tuesday in the United States, do not trade anything paired with the US dollar. Okay? I can't say that enough. Seriously, I really can't say that enough. But anyway, so I got you. I got you, Jerry. Awesome. So let's get into it. So we're going to move on to other upcoming economic news, y'all. I want to make sure y'all are aware of some other things outside of the U.S. having the presidential election on Tuesday. Today, Japan has a bank holiday, so anything paired with the Japanese yen, y'all, you shouldn't be trading it. Again, I can't make sure that you do it. All I could do is suggest that you refrain from trading certain things during these times. Why? Because when there is a bank holiday, the market's going to move a little bit different. Y'all, if we know that the market has a tendency to move different and it's harder for us to gauge how it's going to do because it's a bank holiday and it's not necessarily predictable in a sense, then guess what? Just stay away from that thing. You don't have to just not trade that day. Just don't trade anything paired with the yen. All right, y'all got it? Like, I hope y'all got it. Okay, like we got to stop giving our money back to the market and letting these brokers take our money because we're like, I just want to trade. I got it. You want to trade, but sometimes there's not a setup, and that's okay if the setup is not there because there's a bank holiday, because there's a lot of high impact news. It's okay to not trade. It's okay to not trade that day. Save your money for the next day. Y'all remember Pops from Friday say, man, you get to live. You get to live to fight another day. Well, I'm telling you, you get to live to trade another day. Stop trying to just take trades just because you want to trade. I'm saying that because I've been there, done that. Okay? So Japan has a bank holiday today. That's why I put this on here. I don't trade currencies when they have a bank holiday. Okay? I have learned my lesson. It does not work out in my favor more times than I would like to. And so therefore, I have just decided to stay away. All right. Tomorrow, Australia has their interest rates. That is high impact news, y'all. So remember with this chart here, I have the legend down here. This color here is high impact news. This orange here is medium impact. And then this light orange here is your low impact. This is when I trade. If I see this or this, I stay away. That's me because again, I don't got my head knocked off too many times. I'm like, I'm done with it. I like my head position where it's at. I don't want to get hit no more. Okay. So I have learned my lesson, and I would hope that if you have experienced what I have experienced in the market when trading something that has high impact news or medium impact news, hopefully by now you have learned your lesson like I did, and you only focus on things that either don't have news that day or has low impact news. Okay. So U.S. presidential elections, remember that's on Tuesday. That's high impact. And then also New Zealand have their unemployment numbers. Okay, so that means the U.S. dollar and NZD should be off limits on Tuesday, but definitely NZD should be around that time frame that there's that high impact news. Okay, so if you were already in a trade on, let's say, Monday, and then you're still in the trade Tuesday morning, you're good with NZD as long as you're out before that high impact news. Okay. And then you have Great Britain. They have their interest rates. That's on the 7th. U.S. Fed Reserve, they have their committee meeting. That's on the 7th as well. That's high impact, y'all. Again, look at the times on forexfactory.com. Look at the times on forexfactory.com. That will let you know what what times you should be staying away from the market when it comes to the GBP and when it comes to the US dollar. Okay. And then lastly, Canada has their unemployment numbers. They come out on the 8th. All right. So that is it. That's our upcoming news. Y'all, I did not do, excuse me. I did not do anything because I really wanted to focus on getting into, let me do this. There we go. I really wanted to get into making sure people are prepared for the election. Okay. So that's why I didn't do anything. So I'm going to just share my screen and we're going to look at gold, of course. And if y'all have something you want me to look at, by all means, just type it. Excuse me. Go ahead and type it in the chat. For those of you watching live, if you're watching a replay, then you can type that too, because I can, clearly I can start adding it to what we're gonna look at. All right, moving forward. So I'm gonna do gold first, and that'll give y'all some time to make a decision on what it is that you want to look at. So yeah, let's run it. All right. So what I'm gonna do, if y'all still with me, let me know. If you still with me, let me know. Let me know in the chat. So we are in a new month. So now I am going to hold on. Let me show y'all this. Before I do that. So here's why I said that I want to wait for a second setup. Right? I want to wait for a second setup. So I'm gonna make this bigger. So here's why I said I want to wait for a second setup. All right, so when I marked this up on Tuesday, I was like, because I had already, the buy had already played out for gold, and it had made an all-time high, another all-time high. Well, when I marked it up on Tuesday, it was at this all-time high that they had created. And I'm like, well, if it starts to sell, then I could be looking for, my potential to enter. But I was like, nope, hold on. I know that these past two trades that I had lost, I'm like, I'm not going to just enter on the first setup. I want to enter on the second setup. So when I marked this up, there was a sell counter that appeared, and then there was a second one. Now, here's the thing, y'all. If you trade, but I trade like candlestick patterns, I wouldn't have took this because this candle did not close below here, okay? So I wouldn't have took that. All right, and then another one. So we had our all-time high here. We had a bearish engulfing candle, but it was followed by like a little doji candle, right? So again, that's not my setup. That's not my setup. So then here we go. We have our next one. Now this is actually a sale setup. But remember what I told y'all? I said I want a second one. I want to see the first real setup for a sale, and I want the pullback, and then boom, I can enter the trade for a sale, right? I'm not filing for it no more. With gold during this election, like I'm not filing for it no more. So this is not the setup. I'm like, nope, I ain't filing for it. Plus, it didn't break below the area. This wasn't the area at that time. It was another area. It didn't break below that. Boom. Okay, cool. So then we have another one that happens here. I need y'all to see this. So we had another one happen here. So this is one. This is a bearish around me. We have our first candle, second candle. This candle closes below the low. Okay, cool. So that's the first one. So I was like, I need to look a little pull up. You know what I'm saying? I need to pull back, and then boom. Once that sale happened, I can go ahead and I can take the trade. You know what I'm saying? And I can't remember where it was at, where the setup was at, the line was at, or whatever. But being able to take the sale was a better setup for waiting after the first sale that I saw, and then the pullback, and then boom, you take the sale. So I'm not telling y'all not to trade anything at all, especially this week prior to the election. What I'm telling you is you got to find what works for you, and I would tell you to continue to collect data. Write this stuff down, because there's going to be another election year, God willing. There's going to be another election year in the United States, right? So we need to make sure that we have the data to tell us these are some of the things that I need to look for in the next election year. Okay? So now let me just go ahead and go and mark this up. So we're in a new month. So I'm going to mark this now. Where is the thing at? Oh, there you go. So I'm going to go ahead and mark this. And if y'all have any questions, by all means, type it in the chat. Okay? Even if you're watching a replay, y'all, if you have questions, okay. Well, I got to delete that anyway. If y'all have any questions and you're watching the replay, feel free to drop it in the chat. All right? Seriously. There's no such thing as a stupid question, y'all. We're all here to learn. I don't know everything, but definitely, I'm telling you, I'll give you what I do know. Okay? I don't know everything, but I'm going to give you what I do know. All right? So if you have any questions while I'm updating my top-down analysis, go ahead and type it in the chat. And as soon as I finish doing this, at least like, each time frame, then I'll answer your question. All right? While I'm doing this, though, until I see some questions, while I'm doing this, y'all, don't forget to, if this is helping you, if you're like, okay, I feel like I'm going to be better prepared when it comes to election day. I know what I'm doing. I got my game plan. My risk management is going to be on point. This is what I'm doing. This is what I'm not doing. Whatever it is, y'all, if this is helping you and you have solidified your plan, or you're like, I'm going to work on my plan after this live, then I would say, share. Okay, they can go back and watch the replay, and then that way they can see what it is you saw that gave you your aha moment for this week. Okay, but sharing is caring. And let me remove this because that high is the same. The week and the month high are the same, so I'm not going to put a blue line on top of the other one. That doesn't make sense to me. But yeah, just make sure that y'all share that with the person that, or people that are struggling with trading, that need some help. And even if I'm not their cup of tea, y'all, you ain't got to go back and be like, did you watch the video? No, just give it to them. If they like it, if I'm their cup of tea, they're going to rock with me. If they're like, nah, she's not my cup of tea, then that's fine. Because I'm not for everybody. Okay? So let's go. So I have my day. Let me change this. Let me delete this off of here because these take profit points. Psh, these take profit points are not existent right now. Okay. So now that I've completed my top-down analysis, if y'all have any questions about that too, if you're like, Leona, what is that? How does that work? I have something called a day trading one-on-one program. You can learn how I do it, why I do it, how it helps me when I'm trading. You can actually check that out by clicking the link in the description of this video. Okay. You can check that out by clicking the link in the description of this video. So I'm looking for my next possible buying opportunity because we're in the sale area too. So I think I'll do this because this is the last real pullback. So I do this one. And I'm going to update this. because it looks like price is in this. Oh, yep, it's here. So what we could see is the sale continue. Like, yeah, this could be coming out of here, but it could just push on back down. Or it could just turn out to be a buy. You know, it could turn out to just flat out be a buy. All right. And if you have questions on how I use the Fibonacci, I actually have a video, y'all, on here on YouTube. You can check that out. Okay. You can check it out. But I do go into more detail in my programs, especially during my 90-day trading boot camp that I'll be having at the top of the year. God willing, you know, as long as everything turns out the way it's supposed to. I'll be doing another 90-day trading boot camp at the beginning of 2025. I go into way more detail and you get more hands-on as well. So that's another option as well. So we are looking for, I'm looking for a price to, and see, this is what I mean. Like, it's a lot. This is going to be a lot of traffic here. And I don't like trading when there's a bunch of traffic. Nope, nope, nope. I do not. Not at all. Okay, let me delete that. And then again, y'all, if you have anything you want me to mark up, this is the time. This is the time. Because once I finish with gold, if I don't see anything in the chat, yo, I'm done. Not even playing. I am gonna be DUN, done. DUN. For real. Because it's already 9:55. Yeah. My time. I'm gonna be done. Okay. So there we go. So I got that updated. So this is actually a first. I have not seen an overlap with a my retracement, my golden zone. I have not seen that in the supply zone before. That's the first. But it is an election year, y'all, you know, like it is what it is. Okay, so I have my 4-hour marked. I got my top-down analysis complete. Now, for those of y'all that are familiar, y'all know I trade off of the 1-hour time frame. So I just want to see where it's at the time. I'm going to put my vertical line there so that way I know what I'm looking for. And I'm telling y'all right now, let me see. So retracement did occur. That's only 42 pips. That is not going to be worth it. The juice will not be worth the squeeze. So, let's see. I know this may not be a popular opinion, and somebody might be like, but Leona, I gotta wait until you ain't gotta do anything. I'm telling you what Leona's gonna do. And here's why Leona's gonna do that. Because I am personally going to wait until price has cleared here. Okay? It's gonna have to clear. Here's why it's going to have to clear here. Y'all, I have a retracement area, which is this green rectangle here, right? This is called the golden zone. It's the 50% and the 61.8% on the Fibonacci. If anybody knows those numbers, y'all know that this is a strong retracement, meaning price could come here, okay? It could slow down, meaning move sideways. It could push back down, or it could come through here and then just go on into a buy. It could do three things. Yeah, I don't want to be looking for a buy and then two of those three things happen. It comes in here and consolidates and then pushes down into a sell. I'm over here talking about I'm buying. Heck no. No. Me personally, I know that may not be a popular opinion, and somebody be like, that's a lot of money wasted. Well, guess what? You can trade something else. You don't have to get into every single trade again, y'all. Okay? So me personally, I will wait for price to clear all of this. This supply zone, which is these dashed red lines, and this golden zone, which is this green rectangle here, okay, which is a strong retracement according to the Fibonacci. I would wait until price has cleared this for a buy. And that's only if you're going to take a buy, okay? So that was 80 something pips or whatever. Remember, y'all, risk to reward for my day traders is paramount. It's paramount. You should not be sitting here talking about, I'm about to, jump in this trade, and you haven't established what the risk to reward is. If this is 85 pips from the top of this golden zone, top of this supply zone, what is this? So 87 pips. If it's 87 pips, then your stop loss should not be more than like 42, 43 pips. I'm gonna tell y'all now that's not gonna be as reasonable for gold, because gold usually is like 60 pips or greater. But if again, during this week, it definitely on election day, y'all, you should be looking for very low risk setups. Okay, that should be your focus. Definitely this week, anything paired with the majors, like your US dollar, anything paired with US dollar, you should be looking for low risk setups, period. Because election day is going to be bad. You shouldn't be trading it. But after election day, it's going to be just as volatile. Okay? Eventually, it's going to settle. But if I were you, after election day, November 6th, I still would be super cautious. I still would be lowering my lot size. I still would be looking for very low risk setups. Okay? So that's TP1 for potential buy. And hold up, let me see something real quick, because we might have an imbalance here, which we do. So that means I can mark this up and we can find another take profit point. Okay, so, and if you don't know what an imbalance is, I teach this during my 90-day trading bootcamp as well. Okay. I don't think I did a video. I think I did do a video, y'all. I think I did do a video. I think I did do a video. If I did, y'all, it will be on my page, okay? Just go ahead and check it out. Imbalance for our, and this was 31 October. 31 October 24. All right, and I need to fix this because that's too far down. Let me see. That's right. That's right. All right. Let me ride. Why is it not letting me click the thing? Oh, there you go. Okay. So now when I do this imbalance, so again, so even here, now what we could see is, okay, this could be TP1 for the buy, but the top of here could be TP2 unless I find something in between the two. I'm gonna put this as TP2 for a buy, and I'll still look and see if there's something else. But the top of this imbalance can be my second take profit point for gold. All right. And that is roughly, let's see. Bam, bam. That's a good amount, 142. So it may be something in between the two. So it look like right about here. Here. Yeah, 1, 2. 1, 2, 1, 2. Okay, so instead, this would be take profit 3. This is going to be 3. The other one that I just did is going to be 2. So that'll cut that in half. All right. And if you got it, let me know. If you got it, let me know. And then, of course, the all-time high. Let me see. This has got to be over 100 pips here, too. Yeah, so what's this one? 49. And if y'all wonder, like, well, Leona, how do you identify your take profit points? I'm glad you asked. You can actually learn that during the day trading one-on-one program as well. If you are like, I don't want to wait until you do your 90-day trading boot camp in January, Leona, I want to learn right now. Guess what? You can do that during the day trading one-on-one, because I teach that on there too. 4 for 5. And then this one here is going to be TP5. Okay. So we have 1, 2, 3, 4, 5. Again, please make sure your risk to reward is at least 1 to 2 if you're a day trader. I know y'all scalpers don't do it. I got it. Got it. Okay. Y'all keep doing what y'all doing. But for my day traders, at a bare minimum, your risk to reward should be 1 to 2. If you're like, why should it be 1 to 2? Y'all, please go tune into the series that I am doing. Last part of it is going to be this Thursday, but I just talked about it, gave examples on last Thursday for part 4 of the FOREX Blueprint for Success, because we're trading smarter in 2025. That series, I actually gave examples, okay, and broke down why we want to have a risk to reward of at least 1 to 2. But the higher the risk to reward, the more wiggle room we have, the more profit we stand to keep in these markets, okay? And we can take more lessons. So let's get it. All right. And you can tune into that on my YouTube channel. All right. So that is the buy. The sell, though, let's say price comes up here and then pushes back down. I just want to see for a second how many pips is in between these two, or if I should just be if I should just wait. Yeah, that's only 50, and I know I can't get a stop loss of 25 or 20 for gold. So I'm not even gonna play that game. Not even gonna play that game. Not even gonna lie, y'all. I personally would not take a sell. Because it would have to clear all of this. This is another retracement for the sell, right? This is a demand zone, which signals that we should be seeing price bounce up into a buy, which it did that. It hit in here, and now we have a buy candle follow. Sellers were attempting, but they couldn't really keep it. Buy candle. Sellers are here now, but are they going to have enough strength and momentum to push price down? We don't know. Okay. But if they push price down, this is an area where price typically bounces back up. And that's only if the sellers lose their momentum, right? And then we have the weak low right underneath that. Y'all, this is too much traffic for me. I don't feel comfortable with that. So the only way I would take this trade is if it cleared all of that and it busts down below that. Not even gonna lie. That's the only way I can see myself taking a sell. So again, y'all, you can do what you want to do. It's your broker account. You trade how your strategy tells you to trade. But I'm gonna tell y'all something. I've been trading gold for a long time, and I'm not about to give my money back to the market. You can do what you want to do, but I'm not giving my money back to the market. Okay? So manage yourself accordingly. You know what I'm saying? Do what you can do and what your heart can take. You hear me? Because I'm not playing them games. So that's potentially one. I'm going to change to a line chart just to see. One, let me fix this. That's better. So that's 1, 2. Yep, a 1, 2, a 1, 2. So let's see how many pips that is. If we have like 80 or so or greater, then that's gonna be all right. All right. Yeah, that's all right. That's all right. You know, we might be able to swing that. Okay, so TP1 for sale. Again, you don't have to wait. That's up to you. But Leona is. Leona sure is, because I'm not giving my money back to the market. All right. So I'm gonna look at this, and I'm probably gonna look for one more, and then there we go. So 1, 2, 3, bam. 1, 2, 3. 1, 2, 3. If this is helping you, let me know. If it is helping you and you're like, Leon, I can't type right now because whatever reason, then just hit the share button. Okay? Hit the share button to someone you know needs a little help. Okay? With trading. Hit the share button. And if they watch it and it makes sense to them, awesome. If they watch it and they're like, nope, not for me, that's fine too. Okay? So let me see if anyone put anything in the chat. Nope, I don't have anything, y'all. So guess what? It's a wrap. Take your screenshot of gold because it's a wrap. Okay, let me move this down some. You can take your screenshot. This is what we looking like, okay? Like I told y'all, I personally will not take the buy until it has cleared this supply zone, which is the red dash line, and this golden zone here for the buy, because that's a strong retracement. Price could potentially push back down. It could consolidate in here and then eventually push up, or it can consolidate in here and then push down. Either one, I don't want to be stuck in the trade forever, so therefore I would just avoid it altogether. Wait for it to clear this, pull back down, form a new bullish candlestick pattern because I trade candlestick patterns, form a new bullish candlestick pattern, and then take it to the upside, okay? And I have my profit point set up if I wanted to wait for the sale because I see the sellers really take over. Okay, great. Then guess what? I want to wait for price to clear all of this because this is a whole lot of traffic and I'm not looking to be stuck in the trade. Remember, I'm a day trader. I want to be in and out that day, okay? I don't want to be in a trade for 48 hours, 72 hours. That's a swing trader. That ain't me, okay? I want to be in and out when it comes to gold, all right? And me being able to be in and out of a trade in an hour or two is because I wait for those setups, all right? And when those setups happen, I take it. If they are not there, I move on, all right? Do I win them all? Absolutely not. I shared that with y'all. I took 2 L's last month with gold because I wasn't, prepared for the switch up. I wasn't, but I got prepared for it and I made adjustments. And now, guess what? We're not taking unnecessary lessons because we know it's an election year. It's moving a bit different than what we're used to. So now we're gonna do what we need to do. All right. Any questions on gold? I'm gonna stop sharing now because I've talked to y'all enough about it. Any questions on gold? All right. If y'all don't have any questions, I'm gonna move on. Y'all look, check this out. Black Friday is coming up. Okay. I want to make sure everybody is well aware, y'all. If you want to save, because I know some people have told me this, man, Leon, I really want to attend like your 90-day trading boot camp. I really want to attend that, but my money was a little funny or whatever in 2024. I got it. I'm not gonna, change my price. My price is my price. It is what it is because you had a potential to make way more than what you're paying for 90 days of time with me. And depending on your ticket, you may get, 3 101s depending on which one you purchase, right? So if you want to get the early Black Friday sale so you can get your tickets for things, get locked in savings before everybody else, before people who are not part of the Prosperity College community, then that means you need to scan the QR code, okay? Or you could just go to the website, y'all. Go to the website, fill out the form, and then you'll get locked into the community, okay? And that way you'll be notified of the Black Friday sale, okay? You'll get first deals on everything. All right. If you're not part of the community, Black Friday sale is going to start on the 29th. If you are part of the community, if you're part of the PC community, before then, you're going to get access to the early Black Friday sale on November 22nd. Okay. So that's the Friday before, but the Friday before Black Friday. Okay. Here in the United States. So scan that QR code, y'all, if that's what you want to do. And then lastly, y'all, remember our next live market analysis is going to be on the 10th. We should be able to do every single live market analysis on Sundays. This month, I have not, I don't have any, as far as I know right now, I don't have any travel plans. that could impact that for me doing it on Sunday. So by all means, y'all tune in, put this in your calendar, put this in your phone. All right. Set a reminder in your phone, whatever you need to do. Tune in next Sunday because we'll be talking about post-election, what the market's been looking like, and then also how we could prepare, okay, for the next trading week and also prepare for 2025. Again, y'all, if you have not tuned into the series, the Forex Success, Forex Blueprint for Success, Trade Smart in 2025, tune into that series, y'all. It's going to give you a whole lot of stuff. You get homework. So if you're like, Leona, I don't know if I'm ready to pay for anything, trust me, getting free information until you are ready to pay for something from someone, don't necessarily have to be me, but until you're ready to pay for information and access from someone, get all the free stuff you can. Okay? But you need to apply it. Getting the information and not applying isn't going to help you. Okay? But get the information, apply it, and then when it works for you, okay, should it work for you, then that's when you say, okay, cool. Now I want to, move forward. All right. So tune into that series, y'all. That's free here on YouTube. You can go back. I've already done 4 parts. Last part of it is going to be this Thursday at 1 p.m. Eastern, 12 p.m. Central, and that is 10 a.m. Pacific. Okay, so that's all I have. I hope y'all have a wonderful evening. Have a really great weekend. Get you some rest, especially for those of y'all that are still tuning in on this live stream. Get you some rest, and then I will see y'all next Sunday for the next Forex live market analysis. Y'all have a good one.